All right, here we go. So you guys can ask your questions as we go. I'm just gonna, so this is the stock that I like to trade. It's called SPY. What it is, it's the S&P 500. So it holds 500 of the most traded stocks. So the stocks that are in this is a fund, a trust fund. The stocks that are in this one fund are stocks like Amazon, Tesla, Microsoft, Nike, Facebook. Just 500 of the most traded stocks are in this one stock. I like trading this because it has good movement. Let me go on the 5-minute chart. It has good movement, as you can see. For what we do, we don't trade shares, we trade contracts, and we make money on the movement of a stock. So it's good for us that this stock moves a lot. That's one. Really, it's not news based, so it won't just plummet based on some news about a single company. It's pretty stable. You know what I'm saying? It's a safer route, and that's what I like to do. I like to go for safety. A lot of people who do what we do, options trade, they do it in a more risky manner. I don't like that. I like to take the safer route. So that's what we're looking at. We're looking at SPY. You're going to see me trade this pretty often if you're in the Discord. I'm going to check if you guys have any questions yet. All right, so first what we're going to talk about is exactly what we do. What we do is called options trading. We trade contracts. So say so the stock market opens at 9:30 every single day, Monday to Friday, and it closes at 4, every single day, Monday through Friday. The stock market is not open Saturday and Sunday. And what you see here, why is it still going? This is because this is the aftermarket. It's what happens after the market closes. So you could buy shares and stuff, but you can't buy the contracts. Same thing, this is the pre-market. The pre-market opens at like 4 a.m. until when the market actually opens, which is 9:30. So the time that we spend trading is from 9:30 to 4. You'll see the most crazy movement in the morning. So like super quick moves, big moves, you'll see it in the morning, and then it starts slowing down, and then you'll also see bigger moves towards the end of the day. Okay, now what do we do? Like I just said multiple times, we trade options. Options are contracts that you buy, and what you do in an options contract is you say what will happen. So say today in the morning we woke up, right? And for some reason, which we'll talk about later, we decide that the stock of SPY, like SPY, will fall today down, right? It'll go down. So we buy a contract saying that the price of this stock will go down. That's called a put. Put means it goes down. You can see this little arrow trying to help you say it's going down. And a call means it's going up. So if you bought a call and you said it went up, you lost money. If you bought a put and it went down, like it did here, you made money. All right, so again, let's say we woke up in the morning today, we woke up at 9, brushed our teeth, got ready for everything, opened the market, and we're like, okay, based on something, which we're not talking about yet, based on some type of analysis that we do this morning, we're saying, like, see, I had a line here. So say we did have this line. Based on this line here, I'm going to say that the price of the stock is going to go down when it opens. So we buy a put, right? Now, next we have to determine what is the price we're seeing it drop to. So we could have said it's going to drop to $93, $95. It opened at 97, right? You can see it right here in the corner. It says 97. So it opened at $96.77. So it opens. It's at $96.77. We say, I think SPY is going to drop to around $93, okay? So you can go over here, scroll all the way down. This is the strike price, the price that you think it's going to fall to. You could have said it's going to fall to 300. But we think it's going to fall to $393. It's not loading right now. There it is. Now, next thing you have to do is you have to determine the date. Listen to this carefully. The closer the date is to today is the 12th. We can't buy the 12th contracts today because the market's already closed. But say we bought contracts for the 13th, which is tomorrow. These contracts are going to be way more cheap. They're going to be a lot cheaper than if I bought contracts for next Friday. Because the probability of it happening by tomorrow is a lot less of a chance than it happening next week because it gives us a bigger time frame. So it's safer. So while these contracts are closer in date and they have more risk, the cheaper they're going to cost, right? Now, if I bought a contract for next Friday, we could see that right now. Look, this is January 13th. 93 contract right now, if the market was open, would cost 41 cents. This is $41. So the way to, this is one contract, you multiply this by 100, it gives you 100 shares. It's quick math. You just move the decimal place 2 times. One contract costs $41. Just remember that. You move the decimal place twice to the right, and that's how much you would pay for a single contract. So if I wanted to buy this right now, it would cost me $41. Okay, it would cost me $41 to buy one. Now, let's look at next Friday. So it costs $41 if we bought it right now. Next Friday, which is, I think, the 19th. No, it's the 20th. It's the 20th. Next Friday is the 20th. So now let's see. $393. Let's see how much it costs. Ready? $393 is $205. That's 4 times cheaper. I mean, more expensive. 4 times more expensive to buy next Friday. Why? Again, because you are safer. You have 6 days? You have 6 days, Friday, Monday, Tuesday, Wednesday, Thursday, and Friday. 6 days to make this happen, to make it fall to $93. $393, right? So it's safer, that's why it costs more. But again, you're not going to make as much money because it's less risk. So the more risk you have in these contracts, the more money you can possibly make. But at the same time, the more money you can lose. So I always trade contracts that are usually the same day as it is today. So today, as you can see in the profit section, if you go to the profit section, I was trading contracts that expired today, which is the 12th. That's how I'm able to reap so many profits, those high profits in that short amount of time. All right. Again, we trade usually this same day. So tomorrow when the market opens, I'll be trading January 13th contracts. That's super risky, but if you know what you're doing and you have a good strategy, you eliminate the risk and you make the money. Now again, we say we bought this, right? Boom, market open. We bought January 12th, which was today, 393 contracts. As it's falling, we're making more money. If it went up instead of down, we're losing money. Okay. If you guys understand that, let me get a quick yes. If you want me to go over this again, I can do it real quick. But after this, we're moving forward. So the basic information you need to know is the strike price is the price you're saying the stock will go to. So it opens, you say it's going to go to 393. If it goes in the direction you're saying, you make money. It doesn't matter if it hits 393. As long as it starts dropping, you're making money. This is a very basic overview, guys. There's a bunch of things that go into this. There's a bunch of Greek variables, a bunch of math that you can do to figure out how much you'd lose, how much you'd make. But in short term, that doesn't matter, right? You know you're making money if it's going towards it. Now here, look. Say we bought 393 again, right? We bought it at open. It goes down, right? Here, this is the most money we made so far at this candle. But then it starts going up. What happens when it starts going up? Are we making money still or are we losing it? Say here you were at like 20%. You invested, let's say $1,000. That's an easy way to count. You invested $1,000 here saying it's going to go down. Going down, going down, going down. You're at 20% profit, which is $200. It starts going up. Oh no, it's going up. Now you're at like, I don't know, 17% profit. Now you're up $170. You can decide to, you can sell these contracts at any time. There's no limit. Like you don't have to hold, you don't have to sell. As long as this, like your contract doesn't expire, which it expired today, as long as it's not expired right now, you could sell whenever you want. You could sell the same second. You could sell the same minute. You could sell in an hour, 3 hours, right? There's no time limit. But say we're right here. You're making a little less money, but you're still in profit, right? You're at 17%, and then you're like, okay, now you have a decision. Do I want to sell because it could continue going up, or do I want to hold? Now your strategy, this is all based on your strategy. We see that previously it bounced here. Again, we bounced here. Again, we bounced here, and we're like, okay, there's a good chance it's going to reject here and go down. So we decide to hold. Boom, we hold, it continues dropping, and then we have this line previously that we drew because we bounced here again. We could go on a larger time frame, and I'll show you guys that we bounced at this line. It was this line, I think. No, where is it? Here it is. Here it is. All right, so we could see previously we had a couple bounces. You can't really see very well here, but because it's the 30, each candle here is 30 minutes. But we could see that this line we drew from before held up pretty well. So then Let me scroll back. All right, so it dropped and we hit this line. Again, we have the choice. This is all example. Currently, we're up 50% now, right? Which we'd probably be up way more than that, but we're going to go with 50. So now out of the $1,000 you invested, you still have your $1,000 plus another $500. So you're like, okay, I can either sell here or I can continue to hold and maybe it'll go lower. We decide to sell, which was the right thing to do because you could see it bounced right back up and you would have lost that $500 profit and you would have just had your own money, right? Boom, we decide to sell. That was the perfect way to go about this, this situation. Boom. Now here, what can we do? So if we're here at this line and we saw previously that we bounced, right? I'll show you guys here. We drew this line, we could see it bounced here, went up. So based on that information, for example, we're like, okay. So now, I'm pretty sure this is the exact setup that I took today. I might be wrong. No, I traded at 10.17. Yeah, I took a trade here. All right, so say here we were like, okay, now I think that it's going to go up. What do we think it's going to go up to? I don't know, maybe what it opened at, right? 396. Say we bought 396 calls. So we go on January 12th. We can't do it now because it's already January. The market's closed. I already explained that the market's open from 9:30 to 4 every single day, Monday to Friday. So now we decide, okay, let me buy calls. So where are the calls at? Calls are right here. You can see calls mean up, puts mean down. So we think that the stock is going to go up. We already explained, I just told you guys, we think the stock's going to go to 396. Boom, we buy 396 contracts for $231 for a single contract. So now with your $1,000, you can buy approximately 5 of these contracts. 4. We'll say 4. You'll buy 4 of these contracts. Boom. You invest around $900, $920, something like that. Boom. We're right again. Boom. It goes up. Going up, going up, going up. Again, we're at this little point here where we saw multiple bounces. We can decide, do we want to sell? Do we want to hold? Right? Some people decide to sell. Maybe that's what I would have did. I would have maybe sold a lot of them and saved a few. That's all on your strategy. Each person has a different strategy, but I'll teach you mine today. I'll teach you most of mine. All right? So boom, we sell some. We make a lot of money here. We decide to hold. As you can see, it goes down. Some people would get scared and sell here. But it continues going up. 396 hits our take profit. That's what we thought it was going to go to. We're up a whole lot of money. We sell again. So that's what a put is. Put means down. Call means up. Now, let me explain this to you. I wish I could change this number to 12 because that's what it is today, and I don't know if it's confusing many of you. But just pretend this number is 12 because that's what we're talking about. Today's trading day, which is January 12th, okay? So, say you bought, right here, in the morning, you bought 393 puts, right? Boom, it goes down. You got greedy and you wanted to hold. You said, no, it's going to fall even more. I'm holding till the end of the day, right? It goes back up. Boom. Now you're either losing money or you're in the same position you were when you started the day at $1,000, right? Then it goes down again, up again, down again, up again, down again, right? You're making money, losing money, making money, losing money. The closer it gets to your strike price, the more money you're making. But at the same time, guys, you have to realize your contract expires today at 4 o'clock. And the closer it is to 4 o'clock, the less people are interested in your contract because, again, it's not that big of a chance that your contract, your strike price will be hit, 393. So as the time goes by, your contract is losing value because it's less of a chance that that will happen. And people understand that. Like, let me ask you guys a question. At like 1 minute before market close, right? The SPY is at $397. Would you buy a contract from somebody saying SPY will go to 393? No, you wouldn't because that's stupid. It's pointless. You got to be out of your mind to believe it's going to go down $4 in 1 minute. See, no one wants that contract. Therefore, it's less in value. No one will buy that. It's super high risk for that to happen by the end of the day with 1 minute left. So that's the same thing that happens. People see that as the time's going by, it's getting closer and closer to 4. It's getting closer and closer to your expiration date. The less people are going to buy it, and the less it goes in value. So you have to understand at the same time when you buy your contract, it's going to decrease in value even though it's falling, right? You need, if you have 1 day of expiration, you need that to happen fast, like that. Like the snap of a finger, right? So here, this was a very good play. It happened super quick. It took, what, 55 minutes for it to drop. that high. You would have made a lot of money if you bought here and sold here. So if you guys understand that like as the time of your contract decreases and gets closer to expiration, the less your contract is going to be worth because people aren't really interested. So that's another thing to think about. All right, what else do I want to talk about? So we covered calls is up, puts is down. We covered what a strike price is. Expiration date is very important. So let's go over the example, what I do. So when I'm buying my contract, I tell you guys exactly what I do. So I wish I could share my screen and show you what I post on Discord, but you guys can just look at that on your own screen. So what I do is I post in the Wolf of Options plays section, which you guys can see. I posted today, I said, at 10:17, I said, I added, like I put everyone, I alerted everyone, I said, at everyone, risky but in SPY puts here. This was at 10:17. Well, let's scroll to 10:17. So what if you wanted to join me at 10:17 when I posted this alert, which was right here, 10:17, I said SPY puts. So that means I think SPY will go down, right? It was January 12th, 10:17. At 10:17, I posted puts that I got in on puts. I don't remember how much my contract would cost, but if you wanted to follow me, what you would have done is you would have went on your screen, right? You go to the options tab. I don't know if you guys have it because you have to apply for options, and I have a video on that. If anyone's interested, I'll link it below. Just, ask me how do I apply for options or something like that. I'll post it at the end of this live stream as well. But so basically, once you apply for options, it's free. I don't need any of your money. I don't make anything from doing this. I used to charge $50 a month for doing this, but then I was like, you know what? People think it's a scam because everyone's scamming people out here trying to take their money and shit. I was like, let me just do this for free. What's an extra $50 a month? It was good money, but whatever. Anyway, you want to get in. You applied for options. You're all good. You go to the options tab. Go on puts, and then I am pretty sure I said what strike price I think it was going to go to. No, I didn't. I got 395. You can see it on in the down below, like in the Wolf Options thing. I got 395 puts. So that means I think that from here, $396.75 when I got it, I bought puts. I thought it was going to go to 395, right? So what we need is we need it to go down. So boom, the next minute it goes lower. The next minute it goes lower. Right here, I was up a little bit, right? I think I was up like 6% or something. Then it went right back up. Oh shit, now I'm probably losing money. At this point, I was losing money, right? But based on your strategy, you're able to determine if you're right or wrong. So I don't remember exactly how long I held, but I think I might have held till around one of these candles. So one of these points is called a candle. You can adjust this. You can make it like a line. You can make it some other bullshit, but I like having them as candles because each candle is a minute here, right? This is in the 5-minute chart, each candle is 5 minutes. 30-minute chart, each candle is 30 minutes. Now, different time frames tell you different stuff, but this is like a basic review for those of you that want to start. So I bought it here. You could have bought it with me. Now I updated you guys on everything I was doing. So let me see. At 10:23, I said there it is out here. I was up 18%. So had you invested $1,000 when I said right here, by 10:23 or 10:24, which was right in one of these candles, you were up 18%. Guess how much 18% is off of a $1,000 investment? That's $180 that you would have made in like 7 minutes. In 7 minutes, you would have made $180 off of this call out. Did it move a lot? No. This was what? 396.70 to 395.90. That's 80 cents. An 80-cent drop on this stock from our contract made us $180. Now, if you held till here, I'm pretty sure the contract was up like 50%. So you would have made $500 from your $1,000 investment. Now, I'm not saying that you need to invest $1,000 every time, right? You can what's it called? Invest $100. What, an extra 20 bucks? That's gas money, You don't have to start big. And then what I'm going to recommend to all of you guys, if you're just starting, you don't have to trade real money. We're going to get into this a little later, but I'll talk over it right now. You can invest with, it's called simulated trading on Webull. You don't have to trade with real money. You can trade with fake money, like pretend money. Treat it as if it's a real account. Once you're confident in trading, with that fake money, you can transition to real money. That's what I would have done if I first started. I didn't do that. I went right in with real money. I regretted it because I lost a lot of money when I first started. But you don't have to do that. You don't have to pay me. You don't have to pay the stock market. You could trade with fake money. It looks exactly the same. Once you're confident and you know what you're doing, you can transition to real money. Don't rush. Don't get greedy. Treat this as like a little hobby kind of thing, you know? Just have fun with it. Learn it. This does take dedication. So if you want to learn this, you got to, you know, it's not like that. Like, you know, you got to put the work in if you want to be profitable and learn what you're doing. And I'm here. This is all free. Next. So basically what I was saying is we bought our contracts here. If you got in with me, boom, you made money, right? But then it bounced back up. You know, you're probably losing, went back down, you made money. If you still hold, you made a little more money, right? All right, we sold. That's what I wanted to talk about. Next, how do I know when I want to buy and sell? That was another big thing, right? So what I do, I write visions for you guys every single morning. I post it before 9:30. So before the market opens, you could scroll back every single day. I took a break. I took like a 2-week break like 2 weeks ago, I think. I took a 2-week break from doing this. But basically what I do is every single morning before 9:30, I post my vision. So I post what I think will happen in the market today. And if you go back and you read it, everything that I say happens. I don't know how it happens. I'm just that good, all right? Everything I say happens. So how do I do that? Well, I use this thing called supply and resistance. So that's what these lines are. So as you can see, in the market, this is the 30-minute chart. Each candle is 30 minutes. You can see there's points on the chart where it just bounces for some reason, where people like to stop buying and they start selling. So that's what I use. As you can see, this blue line is a very good example. So at this blue line, we can see once it goes under the blue line, when it tries to come back up, a lot of times it'll go down. It'll reject this line. So that's what I use. I base my visions on the blue lines that were between, right? So today, I based my lines off of this line, and the line above it. I can't tell you like exactly what I look at and how I determine where exactly I'm going to buy and sell, but you base it off of the lines you draw or the lines you get from me or what you read from my vision in the morning, which is right. I recommend for all of you that are starting to read my visions. Again, I make zero off of this. I don't care if you read mine, if you don't read mine, if you invest with me, if you don't. I don't make anything from it. Like, don't, you know. Anyway, so today, what we could have done, we could have drawn another line. I already have a line. I already had this line, and I had this line too. But say you didn't, right? We'll try to draw another one. So if you're just starting, you could have went on the 5-minute chart, looked at yesterday. Where's yesterday? Boom. This is yesterday, right? Isn't that good of an example because it wasn't that high, but so this didn't happen yet. Pretend we're living in yesterday's day. No, this is yesterday's day, right here. So what we could have done, we did have these lines, right? So we zoom in on yesterday. This is this morning. We're looking back at yesterday, preparing for January 12th, which is today. The lines we could have drawn. We could have went like this. You go. This is all available from your phones once you download Webull, or if you have Webull, you can do this. By the way, if anyone has any questions, just hit me up right now. I'll just be reading through it. Thank you, Snari. Love you. I'll explain that as well. That's a very good question. He just asked, is there a limit of buying and selling? So, fuck, my phone died. So, basically, I'm going to plug my phone in real quick. Okay, so I have a YouTube video about this. Buying and selling, right? How many times can you buy? How many times can you sell? There's two options for you. You can either have a margin account or a cash account. Now listen to this very carefully. I recommend a cash account. All right, so with a cash account, you can buy as many times as you want as long as you have available funds. So say you had $1,000 with a cash account. You could split that $1,000 into 5, right, and trade $200 5 times, or you can trade $1,000 one time. But once you trade that money, it's not available until tomorrow. So let me give you an example. We have $1,000. We split it into 2. 500 and 500. We can now make 2 trades with the $500. We invest one time 500, make 100. That's 600. That's put away for tomorrow. Now we have an extra 500. The second piece of the split, 500. We invest 500 again. We make 300. Now our total is $1,400 that we will be able to trade tomorrow morning. Okay, so whatever money you use and make or lose, you will be able to trade tomorrow, the next trading day. Okay? It's way better because you can split it into a bunch of pieces or you can trade it once. Now with a margin account, let me explain this to you. A lot of people like the margin account, but I don't. A margin account, you can trade 3 times, right? You can trade 3 times in a 5-day period. So Monday, Tuesday, Wednesday, Thursday, Friday is a 5-day period. Say you had $1,000. That $1,000 you can invest 3 times in a row without having to wait. So you can do $1,000, make 200, now you have 1,200. That's one. Invest that in the same day, maybe in the same 5 minutes. You invest it again. Boom. Made another 300. Now you have 1,500. You already traded twice. Invest it again. You made, I don't know, 3 grand. Now you have $4,500. But you can't trade again until 5 days are over. So that's, today is what, Thursday? Say you did that today. You can't trade your money until Friday, Monday, Tuesday, Wednesday. You can only trade that money again on Thursday. If you did all 3 today. All right? If you did 1 trade Monday, 1 trade Tuesday, 1 trade Wednesday, you would only be able to trade again 1 time on Monday because you already used your 3 and each trade takes 5 days. So in my opinion, that's some bullshit. Why do I have to wait a certain number of days to trade again, you know? I'd rather just have a limit of the money I can trade, you know, and just be able to trade again tomorrow. Because there's always another setup. There's always another trade to take. You know, if you missed one, don't get all mad or disappointed. There's always another one. Don't rush. Don't get greedy. That's just my opinion. So that's why I think cash accounts are better. That's the difference between cash and margin. And you get the option of making that account when you make your Webull account. It asks you want a cash, do you want a margin? And say you did the wrong thing, you got a margin account, you can change it, but it takes 14 days to change. All right, that was that. How many days, how many trades can we take? What else do we have? What other questions do we have, guys? I don't know if you guys have been asking me questions because my phone died, and that's what my Discord was on. I'm doing it on my computer now, but shit won't load. All right, let me see. Any more questions? Don't see any yet. Oh, my phone just turned on. I'll be right back. My man Snarry just sent me $35 from the server. Thank you so much for that. All right. Snarry's been in here for a while, though. He takes my trades. Let me know if you guys have any other questions. I'm trying to figure out what else I could talk about. I told you what I focus on when I'm making my strategy. There's a bunch of factors you can look at. People like using different indicators, which is like little, like the only indicator I like volume. I like to know how many people are in each candle. Like, so here, let's look at just a random candle. This candle here, it looks pretty big. This one candle, you can see it right here where it says volume. This candle had 377,000 people trading in it in that minute, right? So that will tell us a lot. It will tell us, look at this little candle. This candle right here, tiny little guy, had 62,000 people. This candle had 277,000. That tells us something. It tells us how many people are in, how many people are selling, how many people are buying, okay? So you could use that to your advantage. A lot of people like different indicators, like this or some like this. You know, these can help. The RSI, people say that when it's over 70, it tends to go down, which you could see Let me turn this off. We have RSI here, right? It went over 70 right here. We could have been like, oh, it's over 70. Let me buy it. Let me buy a put, which you would have been right? Now, if it's under 30, boom, it's under 30, it goes up, right? Now, that can help you, but at the same time, it's not always true, okay? Because if you look at a different time frame, right here, it wasn't under 30, but on the 1 minute, 11:05, let me go to 11:05, or 11, right? It was close to 30. Basically, what I'm trying to say is different time frames tell you different things. And indicators can help you, but you should be able to trade without using indicators because a lot of them are lagging indicators. They tell you what happened. You don't want to know what happened in the past because you could see it. You want to know what will happen or what's happening right now. So one indicator that tells you what's happening right now is the volume, right? It tells you how many people are right now in this stock, are buying or selling. That's what you want to know, what's happening right now, not what's happening before. RSI is a good one, though. Okay, it could tell you a lot, but you don't just want to base your shit off of indicators. All right, if you have any more questions, I pretty much told you everything that I wanted to tell you. I'll link how to open an account, how to apply for options, and I'll link my stock YouTube on there. If you're from the biker community, like from my Instagram page where I post my bike stuff, welcome to the team. I've been doing this for 2 years. This is my job. What else? And I like it, you know. I like that it's free because there's like no one else doing this. I joined a bunch of Discord servers when I was just starting, and I still do it now. I'm trying to find somebody who's legit. Like this week, I joined one just to see what he was about because people post on Twitter like they make, oh, I made 20 bands. It doesn't matter how much money you made. You could invest $1 million. And 20 bands is 2% of that million. Now think about it. 2% is nothing. That's not even impressive. If I had $1 million, I could make 2%, right? Anyone can make 2%. What's impressive is when you see like the percentage that they made. If someone chose off like 100% gain, now that's something to be impressed about. Okay, so that's why I always post percentages. So like if you ever see the profit section, today I posted 18%. 18% is something to brag about, right? Now, if I posted like, oh, I made 20 bands, again, you don't know how much I invested, how much percent I made, so it doesn't tell you anything. It's just money. It's just trying to catch somebody. Those are scammers. That's my opinion. If you're posting money without a percent, that's a scam. Because I don't know how much you invested. I don't know the risk you took. But if I post just my percent, you could see the work I put in, and it doesn't matter the amount of money. You can imagine the amount of money, right? 18% is 18%. So don't focus on how much money you made today. Focus on the percent because they add up. All right. I have this YouTube video out. It's if you invested $100 from the start. So if you invest tomorrow $100, and after like I think it's 50 trading days, you would have multiplied your money by 100 times. So that if you invest $100 and you trade every single day making 10%. At first, you're only making $10. The next day, you're making $11. Then you're making $11 and like 20 cents. After 50 days, your account is at $10,000. 50 days of making 10% a day. Okay? Think about that. That's some really cool math. So that's why I post percentages. That's the important part. Don't get down if you're like, oh, I only made $10. I only made $3. I only made this amount of money. Percent is percent. It adds up. As long as you finish the day green, that's good. What kind of indicators do you like to use when figure out when to buy in? Again, I don't use many indicators, though they can throw you off. I like using these lines. So this doesn't take an indicator. The way to draw these lines is you go on a big time frame, you go on the 1 hour or the 1 day chart, you find areas where we saw a bounce. We saw a bounce here, that's why I put a line. Then you go on a lower time frame, and a lower time frame, and a lower time frame. And you start editing these lines to make them as like pinpoint as possible to the decimal if you can. Right? I didn't put this line today. I put this line months ago, and as you can see, it still holds up. And that's what I base my stuff on. What amount of money do you think is good to start with? The amount of money that I always recommend for beginners is between $100 and $300. But again, I don't know your age. I don't know your money, like your financial situation. That's why I'm saying if you're starting and you have never done this before, trade with fake money. It's called simulated trading on Webull. You trade paper money. That's what it's called, paper money. It's fake money. It's like Monopoly money. You could put any amount of money on there. Just what I recommend for you, put $1,000 on that paper account and trade it. It doesn't matter if you lose it or win it. It's not real. But treat it as if it's real money. Find a strategy. Go look on YouTube. Find other people's strategies. That's what I was doing. I read books. I looked at other people, and I figured out what I like and what I like to do. Definitely incorporate these lines. I post them every single day in my vision, right? My lines. They usually don't change unless I add another one. Put those lines on your thing, on your chart. See, you could have done this. Boom, it hits this line, you buy a call because you think it might bounce, right? Boom, you bought a call, you could have made a little money here. Or it goes down here, it's at this line, you see this line on my chart and now you see it on yours. Plus, you see that the RSI on the 1 minute chart is down under 30. You could expect a bounce. Boom, it bounces, you made money. Don't overflow your chart with a bunch of indicators. Don't go like this. Like, just add a bunch of, don't go like this, right? You don't want 50 of them on there. An indicator that I would honestly recommend is learn to trade with volume and just have RSI up there. All right, and then do your own research. And you got to work. This is not free money. It's a free Discord that I'm posting, but this is not free money. You got to learn this stuff. Respect the game. Nothing is free. The only thing free is in a mousetrap. You got to learn this. If you're actually interested, I recommend you guys to learn this. Another line that I would put today. Let me draw one. Boom. Where is it? Here it is. Horizontal line. I'd like a line here. Boom. Why? Here, 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 and in the aftermarket. So maybe we could use this line tomorrow. Another line I could possibly draw is right here. Now again, how many lines do we want? We don't want to overflow our stuff with 100 lines because that tells us nothing. We want to know the main points. So I consider this a main point because look how many times it touched it. This is a main point because it touched it a lot as well. And this is the low of the day. Right? And that's it. Let me get a couple more questions and we're going to call it. I'm gonna link the how to apply for options. It's a YouTube video. Watch that guy. He tells you, what you need to do. Any book for strategy? I'm gonna be honest. No, I cannot recommend a book for strategy. Like I said, there's a lot of scammers, and there's really no set strategy that'll win every time. I don't know how I do it, but please start reading my visions, and you will see that what I say happens. Like, please, let me give you guys an example. Scroll to my vision from, I didn't write a vision today because my phone died and I woke up by myself. Let's look at the, I'm gonna find a vision that I wrote that was good. The last couple of days, the market was pretty crazy, so I wasn't going too hard on visions, but let's go to January 9th. Please go to January 9th. I'll read it for you if you can't see it. So January 9th, I wrote my vision for the market. This was at 9:30, right? Right at market open, I posted this vision. So what you would do, you would open the Discord, read my vision, and then we'll go about trading. You can either do your own trades or you can follow me, right? I said SPY, which is the stock we're looking at now, starting off bullish. What does bullish mean? Bullish means up, bearish means down. I didn't explain that, but that's just basic terminology. Bullish means up, bearish means down. So I said, SPY starting off, going up in the pre-market. Could see a bullish move, which means, again, an up move to over $392. Then I said, ideal situation would be a drop at open to levels. Now, these lines that I draw, they're called levels. That's what I call them. They're called levels. I said the ideal situation would be a drop at open to levels or a push up to levels and puts. Now let's see what happened January 9th, right? Let's scroll all the way back to January 9th, which was where? What is this? What's going on, buddy? What are we doing? Hold on. What the? Oh, let me start over. Here we go. All right, January 9th. I said ideal situation would be a drop at open. As you see, we open, we got that drop. Now, it didn't hit my level exactly, right? I could have moved this up a little bit, but I didn't because it didn't happen yet, right? So had it hit my level, I would have thought to buy a call, right? But if it opened, I said an ideal situation would be a drop at open. We bought puts at open. Boom, we made money, right? So as you can see, that happens. What I say happens. Again, we can go to January 8th. Let's go up again, January 8th. Okay, I said ideal situation would be a drop to level at open, $381 or $380, and calls for a retest of $385. So I'm saying at open, we're going to see a drop, and then I'd like to see it go up for calls, right? So it drops, and at that point when it drops to my level, my line, I would buy calls. So let's go to January 8th and see what happened. Boom. I don't know how it happens or how I do it, right? Market opens. A lot of people recommend not to trade in the first 5 minutes. You can do that if you want. Market opens. We got that drop to $380, pretty much exact, right? Just a couple cents under. And then I bought calls. Boom. To where? $385. I called a $5 gain, a $5 run on SPY, and I wrote this before it happened, right? It's not like I wrote this after. That's why I do these visions. It's like a journal. You can't say I didn't say it because I did say it. Boom, it opened, called that drop, bought calls here, and we're up on the day. Let's see how much money I made that day. Where's January 8th? I think I lost it again. Oh, no, that wasn't January 8th. That was the 6th. This is the 6th. My bad. Yeah, this is the 6th. I said that on the 6th. The 8th was Sunday. Yeah, it's January 6th. That call, those SPY calls went up 300%. So if you invested, like, let's go with an easy number again, $1,000. You bought here at this level that I posted for all of you in the server for free, right, at 380, just like I said. You would have made 3 times your money, 300%. Look at this run that it went on. Look at this, guys. It went on a $10 run. You would have multiplied your money by 3 times. Now that's again, do you have the balls to hold for that long, or did you get scared, or did you sell? That's all on you, right? But I said that in the morning before it happened, and it happened. And this is all for free. I say every single day I write a vision. I didn't do it today because I woke up late, like I already said. But I gave you guys this call out at 10:17 for puts. It went up 18% by 10:24, which is when I sold. All right, hit me with another question. And like I said, start with paper trading. Do not trade real money. There's no point. Unless you want to lose money and you're just balling like that, there's no point of you investing real money. For what? There's no rush. I'd rather have you invest 2 weeks of your time, maybe spend that money on a book, you know? Spend that money on a book, read it for 2 weeks, trade with paper money. When you're ready, go and invest as much money as you're comfortable with and start for real. Do you know about any liquidity sweeps and fair value gaps? I don't know if you just sent a picture or not, because I can't see it on my screen for some reason. I don't understand what's going on. Like, I just can't see that on my screen. It's not showing it to me. But no, I don't. Unless it's something else, but you're calling it by a name I'm not familiar with. I don't know what you're talking about. Anything else? No, I don't watch TJR trades. Let me know if you guys are still confused about anything, or if you're good to this point about what I explained. Just write yes. All right, I'll check them out. But like I said, don't overflow your stuff with a bunch of indicators. Good job, guys. I'm proud of you guys that are actually here and starting. A lot of people, they'll be like, when I first started, my dad was like, why are you doing this? You know, a bunch of bullshit. You're learning something. You know, even if you don't actually go and pursue this, you learned, you tried, all right? That's the only thing that matters. You tried, you put your mind to it. It's better than going and playing some video game. All right, you're learning something. You know something now that somebody else doesn't, and that's what makes this valuable. All right? So take your time. If you're actually interested, you don't even have to rush it. Just, if you're interested, do it, okay? It's definitely worth it. It could be a little side income, an extra $50, $100, $20. That adds up, all right? That adds up. You'll make money. That's it. Don't expect to go in here and make millions, right? Don't go like, oh, I'm going to invest 100 and I want 50 bands by next week. If you can do that, you're a legend, all right? You know, you're a legend if you can do that. That's pretty much all I have to say. If you're interested, good job for being here. You guys sat through 46 minutes of me talking. That's some dedication. I'm pretty sure I explained everything I wanted to. Just play around with different indicators. Search up on YouTube good indicators to trade with for options. What we do is options, right? We want options happen real quick. They're like this, right? It's not like you buy it. You can buy it and hold it for a year because that's when your contract expires. But what I trade is I trade options that expire on that same day. So you need whatever's going to happen as soon as possible because that's what's going to make you the most money. If it happens as soon as possible, right? Search up a bunch of stuff on YouTube, and just, it's constant work, all right? Follow my trades, read my visions, and yeah, just scroll back in the past of what I've said in the Wolf of Options tab, and you'll see what I've said in my visions does come true. I show proof of it also. I post pictures of like what happened that day. I said it a month, so in November, right? It was like November 17th. Let's scroll to November 17th. Oh, November 17th, I think it was. We were at $401, right? You could scroll back to November 17th on the Discord, and I said, I said it something like, in the near future, we're going to see $380, right? In the near future. Guess what happened? In less than a month, SPY fell to $380. Now, yeah, it did go up and all that, but I said in the near future it's going to go to $380. You know, which is, to me, it's pretty crazy how I'm just able to identify stuff like that. If you go back to last year, to March, it was like March 12th on Ethereum, I said all these gurus on TikTok and Twitter, they were saying, oh my God, the stock market's crashing, crypto's in a shithole, don't buy right now. I told my Discord and my Twitter to buy Ethereum right now. In 3 weeks, the people who bought made 40%, which is crazy. Again, all these TikTok and Twitter dudes saying the opposite of what I said, and it happened. Again, another crazy thing that happened. But yeah, this is definitely something that you could put, your mind to. It's very interesting once you get to know it. Even if you don't do anything with it, it's just good to know, Anyway, good job, guys. Thank you for sitting through this. I'll see you all tomorrow. I got a dumb question. Can you buy calls and puts at the same time? Yes, you can. That's called a straddle strategy. It's when you buy a put and a call at the same time, and then basically whichever one makes more money is profitable. But listen, say you bought it here, right? Right in the middle, right here. You bought a put and a call. Now, it literally didn't go anywhere, right? You made money here. You could have sold your put, sold your call, right? You would have made a little bit, but it would have pretty much canceled out. Your profits would have canceled out from what you lost, because whatever you make on the call side, you lose on the put side. I never do that. With my strategy, which is these lines, I'm able to determine where the price is going to go, and based on the volume of how many buyers are buying right now and how many people are selling. Right? Again, there's this other thing you can look at. It's called the level 2. It tells you exactly how many buyers and sellers are happening right now. So here you can see in the pre-market or aftermarket, currently in this minute, we have more sellers than we do buyers. Right? At this number, $397.10, we have 2,000 shares to be sold. Doesn't look like we have too many shares to be bought, right? So based on that information, I could say that we're probably going to go down, to some price. But that's just this is the pre-market or aftermarket. It doesn't matter because, we can't do anything about it. But based on this and the volume and maybe the RSI is what I would base my strategy on. But to answer your question, yes, you can buy puts and calls. Do I recommend it personally? No. I don't recommend it, especially with contracts that expire today, which is what we buy, right? Because you lose money so quick. It's just too risky for me, way too risky, and it won't be as profitable. It's better to determine what exactly is happening and what will happen, and just buy one side and be right, and you make money, right? That's my opinion, and that'll make you a lot more money. So that's basically all I wanted to talk about. That was 50 minutes. If you have any last questions, let me know. Any last questions, let me know. I'm waiting here for whatever you have to say. If you guys enjoyed this and you're ready to head out, just say yes or just say goodbye, thank you, or something, just so I know that you guys are ready to go. And I'll see you guys tomorrow. I'll be posting my visions. I'll be posting my vision in the morning, and I'll be trading tomorrow. Tomorrow's Friday, the last trading day. We're going to finish it off with a banger. I'll post the video. I'll put it in the beginner guide, I think, or I'll just post it here. How to apply for options. And then if you don't have an options account yet, a Webull account yet, consider using my link. You'll get free stocks, and I'm pretty sure I'll get some free shit too. I got you. Thank you guys for coming. You could just head out once you're ready to go. I've said everything I had to say. That was a basic overview. Do some of your own research, okay? Good job, Outlaw. See you later. Peace, man.